Tech led the way today, followed by consumer discretionary. Only thing that was down was energy. Everything else holding up pretty well. Real estate, utilities, interest rate sensitive stocks doing all right as well. The big performer of the day, small caps taking the lead again. Not by much though. Tech did well. S&P up a percent, Dow Jones up, and VIX got absolutely smacked. A little bit underneath the hood here, momentum back in the driver's seat, growth back in the driver's seat. Small caps did well. It was the value plays and the low volatility plays that, in the broader scheme of things, did not hold up so well, as there was some pressure from yields. You can get a little bit of a visual here as well. Pretty much everything doing well, including some of these spin-offs, private equity. Not the best in the dividend and the low volatility space. Looking at the SPY ETF here, you can see when we start to melt back through the EMA ribbons, we've held on this 100-day EMA here. We lost it for a moment back here. So, September, October, November weakness of 2023. Ultimately did catch a bid, and we've been ripping ever since. It's been riding this 8, 14, and 20-day EMA all the way up. Let's see if we can hold here and get a bounce. Oh, we forgot to look at this one before. Oopsie daisy. Well, semiconductors back in the lead, and hard to be bearish when things like home builders and regional banks are performing well. And semis, they had lost about 10, 12% in the past week or so. Caught a bid today, up about 4%. Everything doing pretty well except for oil plays, the oil services and the oil whatever exploration type of stuff. There you go, the whole index there. Tesla up more than 5%, declares its earnings tomorrow. Nvidia almost up 5%. Some of these materials plays, we've got like Fremont, we got Newmont down there. Yeah, let's see, let's keep on going here. The SPY ETF on the Bollinger Band, we have seen this where it rides along the top here. This is again August, September of last year, rode up to the top of the Bollinger, melted back down. Happened again recently, some volatility there in March, April, May, but it caught a bid and then has risen back up. So we have to see here, but we're getting a little bit of a signal. These MACDs are starting to converge here. RSI might be trying to roll over. Let's see. You can't be too bearish here just yet. Okay, in the broader scheme of things, pretty much a good day across the board for all of the major indices. Not great out of Shanghai, surprisingly enough, because we've seen Alibaba do well, and some other Chinese equities that we like, but a pretty decent day pretty much across the board. In the oil markets, we saw that that energy was down. We are seeing some weakness with crude oil. You can see down almost 5% on the weekly there. Natural gas has been getting crushed. A lot of red here, even though we saw a bit of a rebound in nat gas today. On the metals market, a pretty quiet day in the metals, but gold, is flirting up with this all-time high valuation, up 22% year over year. Silver's been performing well year over year as well, but not so great on the weekly. And then copper's one to keep an eye on, down almost 7.5%, almost 8%. Not boding so well, Dr. Copper, for the health of the economy overall. Agricultural stuff, not a whole lot to report. Can't really catch a break in the chocolate bars there. But some of these ones that have had these sort of mega rips, like coffee, starting to cool down a little bit there. Not a whole lot to report on this front, but always got to keep an eye on the commodities, see where the inflationary pressures are coming from. And then looking internationally here, again, a pretty decent day across the board. These are the yields. You can see the yields were just about up across the board today, and that's why you would see some of the quote-unquote low volatility plays or the value plays. They pay a dividend, so they behave a little bit like fixed income, and when yields pressure, or when that's there, then they don't perform quite as well. All right, that's all for now. We'll see you again tomorrow.